Consider a situation where Helen owns shares in a large listed company. If the company makes a profit, it would pay tax on the profit. Once a portion of this profit is distributed to Helen via dividend, she would also pay tax on the distribution, meaning that the company profit would have been taxed twice. The dividend imputation system helps us to avoid this double taxing situation. Under the imputation system, a resident company's equity distributions, such as dividends, can in some circumstances have franking credits attached. Franking credits reflect the income tax that has already been paid by the company. Franking credits reduce the tax payable by resident recipients of the company's distributions. In essence, they are added to the income of the recipient of the distributions and allow an offset to the value of the credit. The net result is a savings in tax in the hands of the recipient. Some company distributions are frankable. This does not automatically mean that they are franked, but it means that they have the potential to be franked. Some other company distributions are unfrankable. The most common type of company distributions that are frankable are dividends distributed to shareholders. Company distributions that are frankable can be unfranked, fully or 100% franked, or partially franked. A fully franked dividend is one that has the maximum franking credit attached. The calculation for the maximum franking credit is calculated by reference to a legislated formula. Consider a company, Builder Limited, that distributes dividends of $140,000. Assuming that its corporate tax rate for imputation purposes is 30%, the maximum franking credit attached would be $60,000. If Builder Limited attempted to distribute $70,000 of franking credits, which is greater than the maximum franking credit, then the shareholders would only benefit as if Builder Limited had distributed the maximum amount of $60,000 worth of franking credits. In such an instance, the company has effectively wasted $10,000 of franking credits. A frankable distribution's franking percentage is to what extent the franking credits attached are a fraction of the maximum allowed franking credits. So if Builder Limited distributed only $30,000 worth of franking credits, then this distribution would be regarded as 50% franked. To recap, to avoid double taxation, we have a dividend imputation system that provides a mechanism to adjust for taxes paid in certain circumstances. A resident company's dividend distributions can have franking credits attached, which are first added to the resident recipient's taxable income, and secondly, used to offset tax payable.